Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, this year, Korea is on course to have logged its highest ever exports. Samsung Electronics is the first individual Korean company to have achieved $110 billion in exports in a single year. That's 130 trillion won. Its strength, of course, in memory chips, smartphones, and home appliances. Where does Korea stand at this point in terms of exports?
Yes, if you look at the export for South Korea, it rose by 32.1% year on year, which is a fresh record peak of US dollar 60.44 billion in November 2021. This is first time surpassing the US dollar 60 billion mark, and it is well above market estimation of 27% after 24.1% gain in the month earlier. If you look at the overall numbers, it's a 13th straight month of expansion of the overseas sales. And various products are doing very well. As you said, the biggest robust numbers are coming in from the semiconductors, and it's up about 40%, and also from the petrochemical product, which is up about 63%, and also sales of steel, computers, secondary batteries, agricultural goods, and marine products and cosmetics all marked a double-digit growth rate. Only part that showed decline was the auto parts and the bio sector, reflecting base effect from the last year. Now, in terms of looking at how it's given how this has been exported to the different regions, if you look at the China, the growth rate was 27%. U.S. was 22%, and the Asian countries 32.8%. So it's widely well spread out, and the numbers looking good. However, though, I guess in terms of the trade surpluses, it's sharply down because of the increase in the import side. That's been quite significant. All in all, we think that Korea is showing a significant improvement in terms of the overall export numbers because of the competitiveness in the various industries. But at the same time, if you look at the pressure in terms of the goods, in terms of the import side, clearly the raw material cost is rising as the oil price is rising and most of the other cost of the goods are rising. So that's the reason why the trade surpluses have declined. But nevertheless, we are seeing quite a robust export numbers and robust economic growth because of that.
Well, looking at the equity markets, on Wall Street Monday, we saw a rebound in U.S. stocks as fears ease about the Omicron variant. The S&P gaining almost 1.2%, the Nasdaq about 0.9%. What's the story in the global markets?
Yes, I think that if you look at the U.S. market, there were major two issues that affected the price decline up until now. Number one is obviously the Omicron variant issue. Number two is the tapering plus the tightening of the monetary policy by the Fed that is expected. As far as the Omicron impact, it seems that that's been removed quite quickly as there's a indication that the variant might be causing milder illness, so therefore it might go away quite quickly. If that's the case, then we can consider the so-called COVID-19 impact to the economy will be gradually removed by the first quarter of next year. So we are watching that closely. But in any case, overall, you are seeing all three index are showing a rising trend, but slightly less rise by the Nasdaq because people are saying that cyclical stocks, including the travels and energy and the industries, will be the ones that will be better because of the low base effect. And as far as the so-called growth stocks, stock prices have been doing very well in the last several years and therefore maybe relatively underperform compared to the value stocks. I guess, however, though, this is more of a specific company issues. If you look at the Moderna, it showed a sharp decline by 13%, and NVIDIA also was down by 2.3%. So this is a bit more of a specific cases of related to the vaccine and also related to the M&A issues. All in all, we think that both S&P 500 and Nasdaq is expected to show further rise. If you look at the futures market, it seems to show that the Nasdaq futures are showing higher rise than the S&P 500. So all in all, we think the economy is recovering. And even though there is concern about the Omicron and the also tighter monetary policy, as long as economic growth rate is sustained, then earnings numbers will be sustained, and therefore the market will be in a good position to further rise at the current point in time.
Well, Korean stocks also rising today, though it was a fairly choppy trade. The tech-heavy KOSDAQ closing in again on 1,000 points. The KOSPI not far off 3,000. Again, not a huge volume today, but retail investors, net buyers. Tell us about the domestic market.
Yes, if you look at the Korean market, ever since we started in December, it is doing relatively better than most of the other countries. Korea had been one of the biggest underperformer amongst the OECD countries up until the end of November. But as we enter the December, I guess the uncertainty regarding the seasonality factors, the capital gains tax issues, and corporate governance issues seems to be gradually going away, and therefore better interest towards the domestic equities. Also, foreign investors are ones that are relatively buying back the equities. They have been major big seller of the Korean equities since the beginning of this year up until now. But as December entered, we are seeing foreign investors are coming back gradually. We think that this is related to what's happening to the currency. The currency had depreciated quite significantly up until now, but since then we are seeing fairly stable numbers somewhere between 1150 to 1180 range. So as long as the currency stabilizes, then foreign investors' interest towards buying Korean equity will be reasonably better. On top of that, we saw China basically cutting the reserve ratios, and Korean equity market tends to be a bit more following the Chinese market rather than U.S. market, and because the Chinese expected growth rate, which have fallen quite significantly this year, is most likely to be sustained at around 5% growth rate reasonably, because these kind of the monetary policy implication, as well as government continue to be trying to boosting the economy and stabilize the economic growth rate. If the economic growth rate slows down too quickly, then that will create social unrest in China, which is something that the Chinese government really do not want. So we do think that despite their concern about the heavy level of debt level in China, but they are in a good position to increase the lendings and also liquidity condition of Chinese domestic economy. We think that this should happen gradually. Right now, people are not really certain whether this is going to be a scalable case, but all in all, we think that the trend should be in a good direction where Chinese government will be basically helping out the economic growth rate and boosting the equity market in the future.
And finally, Mr. Yu, before we go, if we could talk Bitcoin for a minute, that big decline of 20% just last Saturday, falling below $50,000, back above that level now. But, you know, very much of a fear and greed kind of trade, and it would seem there's a lot of fear out there. Tell us what you see happening in the crypto space.
Right. Crypto space is also related to the monetary policy. If you look at the money supply growth rate, particularly the M1 growth rate, it is declining. But nevertheless, it is quite a strong number that's showing about 16% growth rate year on year. So even though there's a huge liquidity condition that's good, because of the concern that the monetary policy might be tightened, as the Fed Chair Powell have said that they will be aggressively doing the tapering. And also, if that's the case, market is suspecting that the Fed interest rate hike might happen much faster than expected. So that caused the uncertainty regarding the domestic liquidity conditions, and that means negative news for the Bitcoin plus the cryptocurrencies. We do need to see ample liquidity condition in the market, for that cryptocurrency prices to further rise. So far, if we calculate any alternative asset, including gold and silver and cryptocurrency, it seems that since the beginning of the year to now, year to date, it has grown only 4%. Which is much smaller than the money supply growth rate of 16%. So we think that if we expect the currency depreciation per se, or the value of currency goes down as liquidity or printing money increases, then the need for the alternative assets, including gold and silver and cryptocurrency, should be strong. But so far, up until now, the growth rate has kind of slowed down quite significantly because of a lot of the regulatory environment issues. But we don't think that the cryptocurrency is going to go away anytime soon, and that the cryptocurrency is causing and creating a new way of looking at the currency market. So we do think that the volatility will remain. However, the interest towards the cryptocurrency should continue to be very strong. We don't think that it will show a sharp drop as the Charles Munger of Berkshire Hathaway is talking about. We think that the cryptocurrency is something that is created some kind of new generation of investment, and that size is right now about $2.5 trillion size, which is not necessarily that big. So we think that there's some further room for further growth.
All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.